Hey everybody, Sive here with the ForexPeaceArmy.com. Welcome back. So let's take a look at the euro currency once again. It's not surprising that market is behaving quiet because we're coming to payrolls report and next day we will get the CPI numbers. As was delayed and now they gradually also is ready to publish. So in such a background, in all this mess that now stands in the general financial life and related to United States, it's all about the tariffs, new Fed chairman, recent data that we've got. From time to time, different collapses on the different markets, volatility, and so on. So it's not surprising that investors are actually do not want to take too much risk and prefer to wait and see what numbers we will get. So speaking about the euro currency on the daily chart, the risk factor that we talked about still exists. So if you remember, we yesterday mentioned this possible bearish grabber that has been formed here. Nominally, this pattern suggests drop below the lows. So if indeed market will follow it, so it should be breakout. So based on the MACD direction, you could see that currently, once again, just theoretically, we have the bearish context. So we have this big drop and a pullback where trend still remains bearish. So all stands together. By all rules, currently we should not consider taking long position, at least until the moment when either grabber will be erased or actual daily trend will turn up, or better, they probably will happen in the same time. So, but that's what we have on the paper. In reality, here's actually two ways how we could act in the current circumstances, especially on the big data release. You know that I prefer to not take the positions with the big dates such as Fed meetings, payrolls reports, and something like this. But I know that a lot of traders actually like to trade in such days, and that's just common thoughts on what things that might be done. So on the follow time frame chart, we see that market stands in a tight consolidation and near the 50% resistance, 922. So this theoretically might be treated as a bullish sign. Because market stands flat near resistance, it seems that it's bullish after that good thrust. At the same time, the things that I personally do not like here is flat tops. Here's maybe it's not quite visible, but on the daily chart, if you could see 3 sessions, in current session as well, currently we have some kind of a flat tops here. It's well, very often it becomes the point for some kind of the reversal something. You could find a lot of examples here. For instance, at this point was top flats. Here, very close here, so it sometimes makes sense. I don't want to say that this is actually the major factor, determinant factor, but we have to take in consideration everything that we see here. From that standpoint of view, what I suggest might be done. So if you would like to trade on a payrolls report in the current circumstances, it seems that better to use stop entry orders. If payrolls will be weak, as it's suggested widely, you could use stop buy order slightly above this area. And in the moment when the data will be released, all this bearish construction and potential patterns might be erased with the jump to the upside. You will step in, you get the feel on the breakout of this consolidation. It's much safer right now than trying to take the position somewhere near the top, preparing for a possible report. And this using of the stop buy order, it also will protect you from possible downside action. And if it will happen straightforward, right from the consolidation, your position will not be filled. Of course, some kind of the volatility spikes here might be, but well, in the current circumstances, the using of the stop entry order seems preferable in the current situation. If you still would like to go with the classical approach using limit orders, well, maybe it makes sense to wait for some patterns. For instance, take a look on the hourly chart, where we have some kind of the consolidation with this widening downside lows with this lower low standing. Here's if you measure the possible upward swing, it will be somewhere near 127 extension. it's not quite clear, but might be treated in kind of the hand and shoulder shape. So for instance, if market will show some deeper retracement, maybe somewhere to 119 area, that will be just safer for position taking and closer to the potential lows. If all this construction will fail, in this case, of course, we will get just deeper retracement and we'll have to return back to idea of this downside ABCD pattern and watching for some particular support areas here. 1830, 1865, the things that we discussed recently. So that, in fact, two options and some adjustments to the current trading session, as we will get the important data release. Tomorrow probably might be the same thing, it's because it will be CPI report. In the last month, you probably know that the PPI has shown a big jump. So a significant increase in the PPI numbers. And it's really will be the big question, what will happen with the CPI, although CPI currently is not representative, because a lot of objects had been dropped out on the calculation, excluded from the calculation, to keep CPI on low levels. So they not currently represent inflation very good. Still, it's just common thoughts on the current situation. So decide what the way is better to you. Let's keep an eye on the numbers that we get and return back to the subject tomorrow.